My name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. Um, we're going to cover our debt service coverage ratio program. I've got two of the best subject matter experts here. I'll have them introduce themselves in about a minute. We'll let some people log in. I know this is probably not the most productive day in the work world because of Masters started today. But we appreciate you taking time out of your day to learn more about debt service coverage ratio program. So give it about another 15, 20 seconds. Hope everyone's having a great April. I hope your April's off to a great start. So still some people logging in. Give it about another 10 seconds and we'll get started here. All right, let's get rolling here. All right, again, my name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. I'm joined by an East Coast and a West Coast guy. So I'm going to start with the East Coast guy first. Chris, please introduce yourself.
Hello, Chris Barker, and I'm on the East Coast. I've been with Angel Oak for right at 10 years, and this is probably my favorite product, so I'm super glad to be on here today and share what we know with you. And I have to give Eric some respect and props. I probably learned so much of what I'm going to say from him today, so thank you. And John, too.
We all learn from each other, and it's because we've been here, 10, 11, 12 years. So Eric, representing the West Coast. Eric Morganson, please introduce yourself.
Eric Morganson coming in, representing these programs. And folks, we are here to make you money. And I'm honored to be on this call with Chris, who is just always a top producer for us. And there's clear reason why. And then there's Johnny J, John Geminade, been here at Angel Oak as long as I have. Folks, we're here to make you money.
Yeah, Eric, appreciate it. Just at Angel Oak, the three of us have over 35 years experience, so which is crazy. And that's why you're going to learn a lot from Chris and Eric today. And they've got a lot of tips and tricks. They're going to show you everything we're going to do here today is from our website. This isn't a pre-can. This is live. Everything's going to be from the website. We're going to show you highlights of the debt service coverage ratio program. We're going to show you a lot of tools that are at your disposal 24/7, and then really how to find these borrowers and how to market yourself to these borrowers. But before we get started, we're going to launch a poll question here. Who has originated a debt service coverage ratio program in the last 12 months? So while that's going on, Chris, I'm going to give Chris this credit. Chris refers to this as a bulletproof loan. And I got that saying from Chris. So we're going to talk about how come it's bulletproof. So give about another 5 seconds for the poll.
It's hovering right around 50-50 there. It's pretty interesting to watch this.
Thank you, Chris, because I still haven't figured out how to see it. So I appreciate it. And it's funny. That has been going closer to 50-50 lately. It was 60-40, I think, last month when we did this debt service coverage webinar. So it's good to see a lot of you realizing the opportunity with those investors out there. So thank you for doing that. So, all right, guys. So let's jump in. Like I said, everything is going to be done from our website. This is being recorded. Put your questions in the question queue, and Chris and Eric will answer those. And if we don't get to them, we will have your account executive reach out to you by end of day today. And this recording will be sent by end of day tomorrow out to everyone. So, all right. So, Eric, let's give us the highlights of the debt service coverage ratio program.
Okay, folks, I see about 55% have not done a DSCR loan. And boy, where you putting these borrowers probably in a hard money loan, because on these, you guys, there's zero debt to income ratio. You leave the income on the 1003 completely blank. We don't care if the borrower's got 4 Porsche payments and 200 grand in credit card bills, there's no DTI on these. You leave it blank. We're simply just going off of the rent roll on the property. Now, what if the property, the payment to Angel Oak is $5,000, but the property rents for only $4,000 a month? Negative rent roll. Who would do that? Well, in California, you're buying property because of the future appreciation value. But in other places, yeah, we'll even fund that loan on negative debt to income ratio. But there is a FICO score hurdle and an LTV to get to zero rent roll. But you guys, these loans are super simple. A lot of people tend to overthink them. John?
Yeah, just hit on some of the highlights here, just what we'll do, what kind of transactions we'll do them on. And I'm hoping you can see what I have up here on the screen.
I can. Everybody can read that. Yep, up to $3 million, you guys. As far as these, what you don't see on that list is we'll do these on non-warrantable condos as well. As you can see, what we do right up front for you as we pre-qualify, we pre-flight everything up right up front for you, is we do the Angel Oak Instant Rental AVM. Where these loans blow up for the 45% that have done DSCR loans is everything goes well. You think the rent's going to come in this way, all right? You disclose to the borrower, everything's great. You order the appraisal comes back, and oh boy, this property doesn't rent for $2,000 a month. It only now rents for $1,600, according to the 1007 aspect of the appraisal, which tells us what the fair market rents are. And now the thing potentially blows up. Nobody has time for that. So we pay for a rental AVM right up front. Now, what if that rental AVM comes in at $2,000 a month and 1-to-1, we need a $2,000 to 1? Great. You don't need to order the 1003 on the appraisal, saving the borrower about $150 on the appraisal. But let's say our rental AVM comes in a tad low. You can still get the 1007 on the appraisal, and we're going to use the higher of the two. You see, folks, these are all risk-based price loans, meaning the more risk, the higher interest rate. The lower the risk, the lower the rate. So if it 1-to-1 cash flows or better, there's less risk. The borrower gets a much better rate. So at Angel Oak, we're ensuring that you're giving the borrower the lowest available DSCR rate out there in the marketplace, because we can play with the rent rolls by our Angel Oak rental AVM right up front. You'll see that there's no limit on the amount of finance properties that the borrower can have. So if you find a real estate investor that, listen, buying investment property is like a tattoo. Once you have one, you always have to get more, right? So you're going to come upon these type of borrowers, and we don't care if they have 300 finance properties. No DTI on these, you guys. This is a very simple loan. We also offer a 5/6 arm, a 7/6 arm, IO on these. Let's see. We even allow these in states where you might not be NMLS licensed, but we'll allow you to do this if you're, let's say, a California loan officer and you have an investment property scenario coming upon your desk in, let's say, Florida or Texas or Utah, or look at all the states that we allow and will pay you on these, even though you might not be NMLS licensed in that state. So with that said, you guys, jump in, the water's fine.
Yeah, E, you touched on a lot of great highlights, and I know Chris is probably chomping at the bit to talk more about that rental AVM. So go ahead, Chris, because this really, you came up with that bulletproof line. This loan is a bulletproof loan, but the rental AVM has made it like crazy bulletproof, right?
Right. So why is everybody on this webinar today? And the 45% that have closed loans, I'm about to really change your opinion of DSCR possibly. So let's talk about the worst thing that can happen on a DSCR loan, okay? And then I'm going to show you how our instant rental AVM alleviates that worst thing from ever happening again. Okay. So those 45% who have closed and the 55%, don't be scared. We're going to hold your hand from the pre-qual all the way to closing. And here's how it works. The worst thing that can happen is, as an LO, you reach out to the borrower and a realtor and you go, hey, we're going to do a DSCR loan. It's magic. The rates are in the sixes at lower LTV. So don't think because it's a no income, no employment, no DTI, that rate's going to be 8, 9, 10%. It's totally competitive with conventional, and sometimes are better than conventional rates because there's no LLPA. I don't even know what that stands for. Loan level price adjustment. What is that? We don't have those. So, but back to how we alleviate that stress of the problem down the road. There is nothing worse in this industry than telling your realtor and your borrower, hey, we have a deal. The rate is this. We're going to close in 3 or 4 weeks. Because here's what happens in real life. And we're going to get into the bulletproofness here in a second, but I want to talk about the pain point first. Mm-hmm. With any other lender who doesn't have our instant rental AVM, you're very susceptible to getting egg on your face because you are at the mercy of an appraiser going out there in 2 or 3 weeks and saying, hey, in my professional opinion, this property is going to rent for X. And X is a 0.65 to 1 DSCR, not the 1-to-1 that Angel Oak gave you in 3 seconds after running the pre-qual, because that's how Angel Oak operates. You get an instant, by instant, I mean within 3 seconds, rental AVM that says, okay, let's say your PITIA is $1,000 for easy math. It'll say, this is going to rent for $1,100, 1.1 to 1 DSCR, right? That loan is off the closing. No VOE, no pay stubs, no 4506, no tax returns, no W-2, no updated pay stubs. We can close that loan in 10 days. Why? There's nothing to verify. You get your instant rental AVM, it hits, give your driver's license, your down payment money, maybe some missing mortgage history, and you're a closed loan. Let's go back to the pain of using another lender. I don't need to name names because I know they don't have it. They all don't have it. You get that appraisal back. Again, your PITIA, that targeted hit was $1,000 a month. And the appraiser comes back and he says, hey, I think it'll rent for 800. Now you're at a 0.80 to 1. What do you do as a smart loan originator to fix that? Well, you're either going to buy the rate down or you're going to put more money down. But that changes the deal and the borrower's got to come up with money. Nobody likes that, okay? Or then negotiate the homeowner's insurance down, switch to an ARM, take a longer prepay, have the realtor get involved, do a rebuttal, or switch to interest only. Oh my goodness. Why didn't you tell me this up front, Johnny, Jimmy? Why didn't you know 2 weeks ago that I had to come with more money down, an ARM, a longer prepay penalty, interest only, which are all great methods to save a loan, but you don't have to do that with us. With us, you know what you have, like I said, instantly. That's why we call it the instant rental AVM. Now, let's get into the bulletproofness because I'm right there. Let me give you 3 examples of how bulletproof this loan is. It's the most bulletproof loan in real estate. Example 1 is your basic vanilla 1-to-1 DSCR. PITIA is 1,000. It rents for 1,000. Off to closing you go. Example number 2, this is a 0.80 to 1 DSCR. The appraiser goes out to the property, says, in my professional opinion, 2,000 square foot house, 2 bedroom, 2 bath. This thing should rent for, our targeted hit was 1,000. It should rent for 800. You're 0.80 to 1. Will Angel Oak still close that loan? You're underwater. Yes, we will. As long as you have a little bit better credit, 700 credit score, and the LTV is no greater than 75%. Most of them are already there. Okay. Now, let me take you to the deep, dark, scary place of DSCR. This time, the appraiser goes out there. You order the appraisal. He does the worst job in the history of appraising. You ever had that? And he says, in my professional opinion, this property should rent for, our targeted hit was $1,000 a month, PITIA, easy math. He said, this property should rent for nothing. Will we still close that loan? Yes, we will. Mm-hmm. If you have a 720 credit score and the LTV is no greater than 70% on a purchase. On a cash out, which we do those, it's 65%. Now let's get real. Does that ever really happen? On a refi, yes, if the property is vacant, it does generate zero. And there are ways to overcome that we can get into. But what does a smart loan originator do to fix this problem, to fix a busted DSCR? There are 7 ways. Buy the rate down, put more money down. Nobody wants to do that. It costs money. Take an ARM. The ARM rates are great. The sweet spot is a 7-year ARM with a 3-year prepay. That's a pretty sweet package for an investment property. The best one, honestly, is interest only. And when I offer that to newer LOs, sometimes I get, but they wanted to pay something down towards principal. Great. That is a perfect opportunity to pay something down towards principal. Unlike Fannie and Freddie, and that's literally the definition of QM versus non-QM, Fannie can't do what we do. They can't do interest only. And when you do interest only, and when you make an additional payment towards principal, it is recalculated, recast, and the next month's payment is reduced. Fannie and Freddie can't do that. Why do people, Eric touched on this a minute ago, why do people buy investment properties? There's 2 reasons, either appreciation of the property itself or cash flow. There's only one way to maximize cash flow, either increase the rent on the renter, ouch, or decrease the payment on the borrower. The best way to do that is with interest only, and it also fixes the DSCR. So there's my bulletproof speech. There's a lot of information there. You know, if you have any questions, please reach out. But I'm going to turn it back over to John because I've been talking too long.
Yeah, no, all great stuff.
Payment on the interest only payment. That's how we qualified the DSCR. We're using the interest only payment. Again, you guys, the better the property cash flows, the lower the rate.
Right. Yeah, no, you guys gave a lot of information, and there's already a couple of questions coming in. But Chris, before we get to some of these questions, Eric touched on, no employment, and so I'm going to ask you to talk a little bit longer. So bear with me here, Chris. So Eric talked about, the 1003 not having income or job information. What do you look for, Chris, when you're doing the prequal? And that's really that I want to really emphasize that, you've said it, Eric have said it. We do this prequal up front, right? We'll do the prequal. You'll get the 1003, you get the credit report. What are you looking for on that 1003, Chris, and on that credit report?
The pre-qual to me is the most important thing in this business. I would not even entertain doing business with a lender that didn't do a non-QM pre-qual, because you're using, like John said at the beginning, 30 some years of non-QM experience to pre-underwrite your file and hand over something to you that you know is going to close. Our pull-through ratio is the highest in the industry. I can't believe it. I talked to other lenders and they're at 50%. Where are we, John? We're
in the high 70s. High 70s. Yeah.
I mean, that's where, if you take anything from this meeting, take these 3 words. We close loans, okay? We get these loans closed. Angel Oak should be known for that. But back to the 1003. Mainly, just don't put income on there, okay? And here's why. If the borrower attests to making $2,300 a month, we have to use that. Your AE will sort that out and filter it out, make sure you don't make that mistake. And then we'll turn over a beautiful polished pre-qual to our underwriting team that zips right through underwriting. But in your mind, when you're doing these, we don't need employment. It doesn't matter. So that's great for the guy who just changed jobs or doesn't have a job or is retired and can't get a conventional loan or doesn't want to do a conventional loan, because this is just a better product. And no income, because again, think of it this way. Anything that has to do with DTI, just leave it off of there. I'm not telling you to get rid of liabilities. We'll ignore that, but definitely leave the income off. Now, what we are looking for, and this is very important. I said it was bulletproof, but it's not bomb proof. Here's the bomb that will blow your DSCR up. If you have little Johnny living in mom's basement playing video games and does not have a mortgage on credit, and they find out, hey, I can use somewhat of a no-doc loan to acquire a new property, and maybe I'll just move into it. Come on, guys. That's questionable occupancy. Let's go there. Okay. So what we're looking for in the real estate owned section on your IRLA is, do they own a primary, and is it of greater or somewhat equal value of the new investment subject property. Now, don't have to have that either. They could rent their primary or be rent free as long as they have other investment properties that are playing in the same ballpark range of our subject property. This is the real question you have to solve, is make sure that it doesn't sniff or smell like they could move into that subject property, because you can't really do a no doc on a primary OC.
Right. Yeah. So E, we're talking about, we got a lot of questions coming in here. E, how many units will we go up to on the debt service coverage ratio program? Did you freeze?
I think he's frozen.
Yep.
I'll grab that one for him in the meantime.
Yeah.
So that's a newly changed rule, and I'm watching Eric to see if he unfreezes. We used to call that the hit
we'll
by
limit ourselves to any one entity to about anywhere from about. I also want to bring back a point that, remember that investor that has all of those investment properties out there. With Angel Oak, we do not we don't run credit on these borrowers, and we don't report to the credit agencies that your borrower has a DSCR loan with us. So a lot of real estate investors, they just don't want all of their rental properties being rated on their credit report, because they want to they want to leverage their credit, and it's nice that we don't report. That's a big deal to them.
Yeah, and that's fairly new, Eric, which is a great enhancement, which it continues to make this program so. And just so everyone knows, it is unit-wise, it is our most popular program. Obviously, bank statements volume-wise is more, but the debt service coverage ratio program is by far, not by far, but definitely our most popular program. So E, I think you were frozen there, so I'll ask Chris. Chris, how many units will we go up to and when I say units, like, is it a 1 unit, a 2 unit? How many units will we go up to?
So max of 4 units, quadruplex. And we see those. We see 4, 3, 2, 1 condo, non-warrantable condo, and condo tel. My favorite.
Yeah, and non-warrantable and condos tells are a big part of this program too. E, what's the highest loan to value we will go up to?
We'll go up to 85, and I want to address the California crowd out there. We'll do 85% LTV on a no-doc investment property loan. Now, it's kind of like a unicorn. You've heard of them, but you've never seen one. In California, the real estate is so doggone expensive that you never get to one-to-one rent roll. And to go to 85% loan to value, we want to see the property at least one-to-one rent roll. Doesn't happen in California. Other places in the nation, yes, knock yourself out, we go that high, but we don't really see that out here in California.
Yep. Yeah, and there's a question here, and I'll answer this one. Julie's asking, can we get a recording of this? Yes, just so everyone knows, this is being recorded. This will be sent out before end of day tomorrow, but just want to make sure everyone knows that. Chris, another thing we kind of, in the last year, what kind of reserves do we require on this program for specific properties?
Super easy. We're only looking at subject property. Just so you know, it's 3 months reserves. And if you're doing a refi, yeah, isn't that great? And if you do a refi cash out, the cash out can be used to satisfy those reserves. Now, if we're talking about a foreign national, it's a little bit more. It's 12 months reserves, but most of the time on your basic DSCR loan is 3 months, just subject property.
Only 3 months on subject property. People, yep. Do you hear that? That is very unique in this business.
Yeah. And Chris, you mentioned 3-year prepayment penalties, like the standard. What other variations of prepayment penalties do we have?
So when we use the variations to, let's say you're at a 0.97 to 1 DSCR, and you need just a little bit more, and you might need an eighth better on the rate or whatever it might be. So we offer a 5, a 4, a 3, a 2, a 1, and a none prepay penalty, as long as state laws allow that, and most of them do. But as you can imagine, the longer you commit to being in that loan with us, say 5 years, the better the terms are going to be, the better rate, better pricing. Now, the sweet spot is the 3 year. If you go under that, it's still great, but the 3, 4, and 5 minutes, those are home run balls every time. They're beautiful.
Yeah, and you talked also about, the rates, these being very competitive to conventional and not having those LLPAs. Chris, Chris has a question here. Do you allow first-time investors? And I want to make sure we're clear. Yes, we do allow first-time investors. I know we talk about this like for a seasoned investor, but we do allow first-time investor. And again, Chris and Eric have both communicated that, as long as either they own a primary or as long as they have a history, of being an investor. But we do allow first-time investors. So, some other questions.
Real quick, John. That's one thing about this business I've never really understood. It's not complicated renting out a property. It's not complicated.
Yep.
We allow first-time investors. I know there's a lot of guardrails on first-time investors out there with our frenemies, our friendly competitors, but we don't think it's complicated. Literally, you buy a house and you rent it out. We're fine with that. Never done it before. It's not complicated.
Yeah. Renee, I'm going to answer this question. We do not have an ITIN for the DSCR product, so I apologize for that, but maybe someday. Hold on, looking at some questions here. Hey, Eric, talk about LLCs and S corps, C corps, and
yes, folks, we allow vesting in LLCs. S and C corporations are going to see that a lot. It's smart about the investor having it in a corporation, so they got that corporate umbrella protecting their personal assets. So absolutely, we will. Now, when you come upon an LLC, and that LLC is owned by another LLC, that is LLC stacking. Now, if it's only one guy that owns this LLC and he owns this other one, we can get that down. But when you have an LLC and other members own this LLC that owns that one, that's where we're going to tap out on that. Just making sense. Anybody who is on the LLC would also be on the DSCR loan with Angel Oak.
Yeah, guys, we have a lot of good questions coming in here. Thank you, Eric. Chris, can you use this for a 1031 exchange?
Yes, and we do it very often and very smoothly. It's as easy as pretty much telling us that.
Hey, Eric, we mentioned it early, but I want to circle back to this. Gift funds. Do we allow gift funds on this program?
Yes, we will allow gift funds. You want to go buy, you want to go help your son or daughter go buy an investment property, Angel Oak allows gift funds. Now, we want to see the owner of the rental property have at least 5% skin in the game, and they have to be able to cover the 3 months reserves on the subject property. Not a very high bar now, is it?
Yeah, no, thank you. And then, Chris, you might have to refer to your matrix on this, and I hope I'm pronouncing the name right. Lejeune. What's the maximum LTV allowed for a cash out?
Cash out, and we're assuming a 720 credit score and so on. You're looking at 75% LTV cash out, 700 credit score.
Chris, while you have that matrix up, talk about the iterations of cash in hand, if you don't mind, because I mean, and you know this firsthand, Chris. These cash outs don't come one at a time, right?
I've got 5 in right now. We call it, 5-pack, 6-pack, whatever it is. But yeah, I mean, it's brilliant, a brilliant strategy for loan originators to get more business. Find somebody who is, a savvy investor who has 5, 10, 15 properties. Go find the largest loan amount with the highest rate and refi them and give them more money to do what they do, which is buy more properties. But to answer John's question about cash out, let me read this exactly. Cash out is unlimited at 50% LTV or less. And when we're talking about unlimited, we're also talking about loan amounts max up to $3 million. On cash out loan amount, yep, $3 million. You can get that. So let's take it a little bit higher and a little bit tighter. If you take it up to 60% LTV, you can only get $2 million out. That's pretty awesome. Let's take it a little bit higher and a little bit tighter. Once you go above 60% LTV, your max cash out is $500,000. So pay off the first, get you $500,000, go buy several more investment properties. It's awesome.
Yeah, and it's that I mean, I know we talked about first time investor, yes, but that savvy investor out there, like you said, Chris, you have a 5-pack or a 6-pack, they're taking cash out of their properties and buying more, because that's, they realize, where you can accumulate wealth is obviously in real estate. There was another question here. We're going to touch on our foreign national, because the debt service coverage ratio does work for foreign nationals. So, Eric, talk about seller concessions. This is something that's changed over the last year.
Yeah, we allow up to 6% seller concession on these. And I do want to point out, on a DSCR foreign national loan, no credit whatsoever, no housing history, no income whatsoever. It is the most blank 1003 you'll ever fill out in your career. However, the one side on foreign national DSCR loans is we don't allow interest only. That is a 30-year fully AM loan.
Yeah, and we'll talk a little bit more on the foreign national. Just get people asking some questions. Just trying to look. And we talk about the amount of exceptions we get here, because obviously we have experienced people like Chris and Eric, looking at that pre-qual up front. Talk about, trying to think, get my thought process here. About 20 to 30% of the loans we close don't meet our guidelines, because Chris and Eric are getting those exceptions. And Chris, talk about at the time you get those exceptions. At the time you get those exceptions, easy for me to say. At the pre-qual stage.
So up front, again, yeah. I think one of the most beautiful and important things about the Angel Oak pre-qual and experienced AEs are, you know what you got before you go out and pitch it and sell it. I just cannot think about anything that's more painful in this industry than telling somebody something and that doesn't come true. So we're looking at every single aspect of, hold on, I got an underwriter calling. Let me get rid of that. Sorry. Up front, so that you guys don't get egg on your face down the road. And the questions that you have, we will answer. Our goal is to be your tour guide through the land of non-QM. So we keep you out of the landmine field. And instead of you getting hit with a gotcha, we're going to take you to the gimme. For example, and I see this all the time, we use the highest of all middle scores. So let's say you had a golf foursome and they're looking in Myrtle Beach to buy a condotel, and you got 4 guys and one's got an 800 and the other 3 have a 600. Most LOs would go, well, we're going to have to use the lowest of the 3 middle, and they're going to take it conventional. You know how badly we are going to dominate conventional when we're scoring off of 800 on that. And, sometimes people go, it's not about rate. We would crush them on rate when we're doing an 800 credit score at 70, 75 LTV versus conventional. But while I'm on highest of, I want you to remember this. We use the highest of the middle score. Then in the qualifying methods, we use the highest of qualifying methods. So let's say you're doing a long-term rental. Well, you're going to use the highest of either the Angel Oak Instant Rental AVM that you get immediately, or the 1007. And if it's the refi, we're going to use an actual lease plus cancel checks and use the highest of. So highest of credit score, highest of qualifying methods. Now, a lot of people are on this call to find out how to get more business, right? Let me tell you a great way to get business. I just mentioned long-term rental. And as an AE, I'm going to drive you to go do this. If you have a short-term rental property, please go find that listing agent and say, look, Nobody else can do what we're doing. And I'm going to use the highest of these qualifying methods to get that unit sold or refinanced for you. On a purchase, here's what we're looking at. Instead of the instant rental AVM, we're looking at an air DNA report, okay? And in February of a year ago, the National Appraisal Advisory Board came out and said, hey guys, stop putting short-term rentals on a 1007. So they only gave us long-term rental figures. Then they came up with a in lieu of substitute that says, will you accept a short-term rental narrative in lieu of a 1007? And back then the answer was no, because it wasn't uniform, it wasn't consistent, therefore not securitizable. Okay, well, let me tell you something. Angel Oak now accepts a short-term rental narrative. So we take the highest of the air DNA or a 1007, which probably won't work because it'll come back with long-term figures, or the short-term rental narrative, or if it's a refi cash out short-term qualifying method, the an actual VRBO or Airbnb report, annual report, plus 3 months of statement showing you're getting it. The highest of. So in that pre-qual stage, we as AEs are going, hey, that might not work, but this will. Let's pull this report and make that work. So again, we're protecting you as a LO from getting egg on your face and everything changing in 2 or 3 weeks, which makes it very uncomfortable and makes you very not confident in selling these. What we're here to do is to give you that comfort and give you that confidence so you can actually get on the phone and call that short-term listing agent and go, only I have this for you. Like, no, I'm not going to bring you donuts and coffee. You're going to eat a lunch at the steakhouse because I'm going to get that property done for you where no other LO could. But that's a little off the subject, but I had to say that.
No, Kurt, but it's all valuable information, right? It's all, it really goes back to what you started with, how we make this loan bulletproof, not only for you as an originator, but for your borrower and for your referral source. So well said. Roger.
You guys, I just want to emphasize a point here. Folks, we do all this right up front. Yep. We vet it out right up front before you even disclose. We're getting this all structured for you right up front, so you know you have a deal. Now, let's say you haven't filled out a 1003, you haven't run credit yet, you're just wondering about this scenario. Give your Angel Oak account executive a call, and we will walk you through the scenario. We love scenarios, you guys. So don't hesitate to reach out to your Angel Oak AE and bounce off them. I got this borrower that's possibly wanting to buy a rental property. Here's the fleas on the dog. Can we talk about it? We love that. We do it all right up front. Saves so much time and grief.
Yeah. Hey, and Eric, you brought this up earlier. Did you say that this won't report on the borrower's credit? And the answer is it will not. It's a business purpose loan. So they will not record on their credit report. So just want to make sure Roger got that clear. Hey guys, I know we're pushing time here. Let's talk about the debt service coverage ratio second lien, and then we'll talk briefly about the foreign national. So Chris, can you take us through the debt service coverage ratio second lien highlights?
Right. So this is a semi-new product, not super new, but not many lenders offer this. Now, what we're talking about is a DSCR closed-end second. The main thing that you want to know here is, and I love how Eric talks about this, is dead or trapped equity that borrower can't touch. And another thing I saw, great marketing materials we had, and we'll talk about that in just a second. I think when you do a blended rate, I mean, think about all those borrowers with that 3%-ish rate out there. They're never getting rid of that. Okay. They're just not going to trade that in for a 7%, 7.75% refi cash out rate. Now, if you compare that to a blended rate, meaning a weighted average blended rate of, let's say you got a $150,000 3% first and a $200,000, I don't know if you know it or not, but we can go up to $350,000 loan amount on a DSCR second. that blended rate, you're probably looking at like 6.5. I don't know, John, if you could even pull up a blended rate calculator,
Yeah.
or you want to do that right here. But I mean, you can go to 75 LTV on these, or CLTV, I should say, with a 720 credit score, 70% with a 700 credit score. But again, the only way to tap into that equity that people are, and what's the average, John? I think it's something like $200,000 per American.
I think the average person has well over $300,000 in equity.
Yeah, that's crazy. Eric, I know you know some numbers on that.
Well, there's another thing that Eric.
Average equity in American residential real estate as we are on this webinar right now today. And why would somebody with an investment property want to tap into the equity on that investment property? Again, the analogy of the tattoo. Once they have one, they want to buy more. Don't ever underestimate that. So you guys, it's just such blue ocean out there with this program. Even the tangible net benefit of doing a refi with Angel Oak, because again, we're using the higher of all middle FICO scores. We're using the higher of whatever rent roll that is, whether it be our Angel Oak rental AVM, the 1007, or a lease that's in place. You could be refinancing DSCR loans you've done in the past.
Yeah, Eric, and Chris, to your point here, I just put a quick scenario in here, and you're looking at a blended rate, even with a 9.75 second closed-end second for the debt service coverage ratio, you're looking, at a blended rate of 6.625. We can go into all the stats about, how much debt Americans have right now. The average credit card rate, if you don't pay your balance off every month, is almost 25%. So a blended rate of 6.625 while keeping your first lien as Derek says, multi-generational low rates in place and tapping that equity that you have in that subject property. And guys, this is a tool out here, and thank you for bringing this up, Chris. This is the tool out here you can use and run scenarios morning, noon, and night. Oh, it's always available to you.
Yeah, I would screenshot that. I would send that to my borrower. Now, let's keep in mind, let's back up a little bit. This is a DSCR investment property, no income, no employment, no DTI loan, and you're looking at a cash out of 6.625 that you can pay off and run back up, pay off and run back up, and keep your beautiful, I think you put in higher than a 3% rate in there. Why are we not doing billions and billions of this every month? We're doing a lot, but we need to be, I say collectively, all of us need to be doing a whole lot more of this because people don't know how to get that money out of their house.
Yep.
I call these missionary meetings because we are spreading the good word about what we can do to help people. I mean, that's exactly what this is. And if you weren't on this call, you're missing out.
Yeah. So just want to get us back to center here. So, again, we talked about the debt service coverage ratio. Let's talk a little bit about, and I can cover that because we're going to have you show us how to, Eric, you talked a little bit about the foreign national, right? We'll go up to loans of 1.5 million, do it in a 5, 6, 7, 6, and 30-year fixed investment property only. They do have to ratio. This is a little different. They have to ratio at a 1-to-1, and we do allow them to close in an LLC. A little bit different for the funds. The funds do need to be sourced and seasoned for 60 days, and 30 of those days need to be here in the U.S. And we do require 12 months reserves on this property. I know I learned this from Stacy. We require, this is a 70% LTV. I would probably take another 5% and bring that into the country so you don't have to start the clock over with if they need additional funds. Or as Chris says, if they don't qualify at a 1-to-1 ratio, maybe they put a little bit more down. So that's kind of high level of the foreign national. So let me see if any questions came in regarding this. I think we're good.
Let me jump on that, you guys.
Yeah.
Angel Oak is unique in foreign nationals. You guys, is this not a great country or what? People from all over the world see what happens with American residential real estate. They are all fiending to get a foothold and live a life in America. And to do so, they want to get an investment property here. Now, these are for people, for national loans by nature, or for folks that live outside the country and want to buy a investment property within America. By nature, that's it. We allow the borrower to keep the reserves, the 12 months reserves, in their country of origin. Now, why is that unique? Well, it's expensive when you take money from a foreign country and put it into a U.S. bank. Guess what? You're paying commission on that, sometimes up to 3%. That's painful. They don't want to do that. So we allow them to keep their reserves in the country of origin. That is a touchdown right there.
Yeah, that is big. That is big.
And the reason why we need that money in a U.S. bank for 30 days, I mean, you're going to find people like, I got a 15-day escrow. Let's get this thing going. Well, it's a non-TRID loan. So we don't have the 3-day right of rescission. However, that is literally a federal government imposed a deal that it has to be in the U.S. bank for 30 days. Not difficult.
And you, like Eric said, there's so much global strife going on. So people are, really flocking here to own, U.S. real estate. Chris, and I highlighted here the visas required, but talk about the visa waiver countries that are allowed to buy.
Status.
Yeah. So you'll find that when you're getting these foreign national loans, that most of the origin countries are on the visa waiver list. So you can just simply Google U.S. visa waiver country list, and you're going to be shocked. You're looking at I think it's like 36 to 40 countries. So for example, let's say Canada. We don't require a visa because it gets a visa waiver. But you look at that list and you just go, holy moly, how easy is this loan? I don't need a visa because they're Canadian or Great Britain or whatever country is on that list. I don't need a credit report, which also costs a bunch of money and is a pain. Don't need income, don't need employment. I just need 30% down, and I need to see it for 60 days. And everything you just said, that it's funny. I say this, that is our easiest loan program we have, and it's easier than being a U.S. citizen. I said it. True.
Yep. Yeah, I don't disagree with you. So Eric, I know we're coming close to like 10, 12 minutes left here. So let's go back to the homepage. And, people really want to know rates. They want to know how do I get a 1003 and a credit report to you? So Eric, take us through quick quote. Take us through.
Folks, watch how easy this is. This is how simple it is. There's our website, angeloakms.com. Might want to bookmark it. You got a scenario? Just come right in here. No password, no login. That's what everybody needs these days, right? More password and login credentials. No, we don't need that. So this is all open architecture. You just click on this non-QM quick quote. Go ahead, John, click on that. First thing it's going to ask you, what channel? Normally you're a broker. We do have non-delegated correspondent. Now you're going to see 8 programs. Go ahead, John. Go ahead. What box are we going to choose today?
Well, we're going to do DSCR because that's what we're talking about here. So let's do it.
All you do is you put in your loan amount. You just literally fill out these cells, and we're going to give you the interest rate right there and then. You want to play around with the LTV and what the interest rate is. You want to play around with what the rate is with a 1-year prepay versus a 3-year prepay. Want to play around with any of this? All you do is fill out these cells, and voila, you have your interest rate. Now, folks, also while John's filling that out, we need your help getting the word out that this program even exists. On our website, we have customized marketing for each of you guys. You want to get some customized marketing plans?
Yeah, we're gonna talk about the marketing portal.
I know, I'm jumping ahead. So look at that rate stack right there. You get, we're talking about a $300,000 loan, 740 FICO score. I didn't see the LTV, 75. What? Are you kidding me? We have a rate of 6.874, giving the borrower a $375 lender credit. Are you kidding me?
That's pretty nice there, E. So now they've run that scenario. They want to get the 1003 credit report to you. What do they do now?
John, real quick, I want to point out, guys, what if you get your borrower, I don't know, on this, we give the borrower a 7.374 rate. John, go down to that. You see that's pricing at 102. That gives your borrower a $6,000 lender credit. But let's say you're charging 2 points origination. Well, in reality, you're getting your 2 points in origination, but Angel Oak is going to give your borrower 2 points in lender credit. So in reality, you're doing a no-cost loan for that borrower, but yet you're making 2 points origination plus a processing fee. Do you see what I'm talking about here?
Yeah, and that's the great thing you just brought up is, your account executive is going to have this conversation with you. Is your borrower really rate sensitive, or are they really just want to, I know everyone's rate sensitive, so I don't want to sound ignorant to that, but there are different ways to get these deals done. So if I click on the 6.874, am I locking this loan at this time?
Nope. Go ahead and click on that, John. What that's going to do is it's going to open up these fields. We want to make sure we have the right subject property because Angel Oak is paying for that Angel Oak rental AVM. That's costing us money, and we don't want to have the wrong address in there. Fair enough. So you simply put in the subject property address there. You put in your contact information, and we simply go to town. Your account executive is going to get an email saying that scenario came in. We're going to get back to you with immediately that rental AVM. Now, on properties that are that are more rural out there, you guys, sometimes that rental AVM, we don't get a confidence score hit. It's going to happen every now and then, but normally they come in. So we're going to communicate with you with this here. We're going to structure the loan right up front for you. I'll pre-qualify it. Your account executive is going to email you the pre-qual approval with instructions on requesting disclosures, registering the loan, and requesting disclosures. Once the borrower signed the disclosures, now the file is ready to be uploaded into underwriting. And as Chris said, they just go right through underwriting. Why? We've already done all the lifting here up front.
Yeah, Chris, Eric talked about sending the actual pre-qual back to the broker, and he talked about the speed. How long does it take you, an average, to do a debt service coverage ratio pre-qual?
I'll clarify the word average. 5 minutes.
Yeah.
5 minutes. If I'm sitting in front of my computer and I'm not doing a webinar or on the road, I can have that back in 5 minutes. But let's not forget, can you scroll up just a hair where you had that property address input? Do not confuse and think that we're going to disclose off of this. This is where the sausage is made in terms of us pulling that instant rental AVM figure. And within 3 seconds, it might be 2, I'm not sure, you're going to get a property analytics report that says this property should generate $2,750 a month rent. Meanwhile, the AE is in the background calculating, okay, what's my LTV? What's my loan amount? What's my tax, insurance, HOA fees? I'm at 2270. This is coming in at 2350. I'm at 1.04. This is a closed loan. No surprises. And even better, if that hits and you like it, we still need an appraisal because we got to make sure that property is in good enough condition to lend on, but we don't require the 1007. Okay. So that saves you a little bit of money and a lot of time and a possible complete chaotic failure of a DSCR loan. With Angel Oak, that is alleviated completely in 5 minutes.
Chris, talk about the speed of self-disclosures also.
Yeah, I mean, I love non-QM. I mean, I get everybody has to live off the agency stuff too, but I mean, I would go crazy if I had to do that because of the creativity and the speed and the convenience and the ability to differentiate myself from the other LOs. Right here it is. You can close that loan. I closed one last week in 8 days, but you get the instant rental AVM in a few seconds. You get the pre-qual out in 5 minutes. Then you've been pre-approved. You're pre-underwritten. You know what you have. You're not going to choke to your realtors, and you can disclose within an hour. So your guys have signed, And what's next? You got to upload. I hear this almost every day. Hey, I'm uploading for my initial underwrite. What do I need to put in there? Well, it's a refi cash out, so I don't need assets for reserves at all. There's no purchase contract. I pretty much need a driver's license, taxes, insurance. Here's our mortgagee clause. Get that to me, and we'll have this thing closed pretty quickly. And we're fast. You know, people go, "Did you rush that?" I'm like, "Hey, you just got the conditional approval. You need a rush." That's not always, but most of the time it is. I mean, let's just be honest. It's
well,
really
it's
good.
also this program too, right? We have our most popular volume wise is bank statements, but this is DSCR, like you said. This is a pretty simple loan.
Love it.
Linda was asking, can you use a current appraisal? Yeah, Linda, we can. It has to be done by an AMC. You know, we'll reach out to your account executive to get additional details. There's seasoning on that, and just so you know that. All right, guys. Now we got it.
You take transferred appraisals, guys.
Yeah, we do. We do.
And we get a lot of them because we close loans.
All right. So, Chris, let's talk about how do you market these programs? I know you do a lot of stuff on behalf of your originators. So let's talk about how to. I love this because our logo not the logo, but our innovative solutions for underserved borrowers. Well, I think we're going to talk about our marketing portal, which I think is underutilized by originators. And I think it's one, if not the best marketing portal in all of lending. So Go ahead, Chris.
So have you ever seen the movie Field of Dreams? If you build it, they will come. If you market these products, I promise you, the borrowers will come. And this is, once again, your ability to differentiate yourself from the other LO that wasn't on this call that only knows what's inside that vanilla box of conventional lending. So we have a portal. You log into our portal, you can get a user ID, and I got one in an hour today for one of my LOs. But like John's showing you right here, angeloakms.com, log in, and it's as easy as this. Click on marketing, click on flyers. You will then see about 20, how many is it, John? 20, 25 flyers in there. The beautiful thing about this is, again, if you build it, they will come. If you market it, they will come. Put your information in one time, and it covers or carries over to every single flyer in there. So let's say tomorrow you go, I want to market DSCR, and I'm going to save this as a PDF, and I'm going to email it to every realtor in my state. You could do that. And then let's say Monday you say, I want to talk about DSCR seconds. I'm going to send this to everybody in my database that I did an investment property for over the last 5 years. And then on Tuesday, you want to solicit self-employed borrowers. Click on the bank statement, save it as a PDF, print out 100, have a self-employed buyer seminar. If you don't want to do it, or you're not yet comfortable and confident enough yet to do it, one of our AEs will do it on your behalf. I get on Zoom calls. I know Eric does it all the time, Teams calls, and we don't say who we're with. We just say we are your portfolio product specialist, and we'll go through all this with you. And usually by the second or third time, once you've heard it, you're then confident enough to lead with these products, because everybody's got conventional, but the way to differentiate in your market and dominate it is with these products right here, and they work.
Yeah, so you know, two things. Account executive here in Dallas Fort Worth did he Googled real estate investment clubs, and he stopped counting at 20.
Ooh.
And then he called one of his originators and said, hey, let's go present on your behalf, right, for the originator. And when they got there, they asked a room of, I forgot the size of the room. They asked, anyone heard of a debt service coverage ratio program, to a group of real estate investors? And most had not.
Mind blowing.
True story. True story. So we also have, obviously, these social media posts. We know social media is big out there, and I know we're near the top of the hour. So again, this is being recorded. We will get this out to you guys. But we have all the social media, whether it's for actual borrowers or realtors. This has all been done for you. Don't try to recreate the wheel. And as Chris said, Eric, I know you do a lot of these realtor presentations. I know we have a stat that if you get 9% of the loans we close underneath our bank statement umbrella program are for realtors, 9% of the loans we close, I bet you it's double that under the debt service coverage ratio. So, Eric, anything to add on marketing?
Folks, get the word out that this product even exists. And John's right. Real estate agents are fiending to buy more rental property out there. Through you, you're going to get them the best rate. Why? You're going to get them the best debt service ratio coverage percentage. Again, risk, reward, risk, interest rate. Folks, all those DSCR loans that you've done out there, go to our quick quote, price it out, and there's tangible net benefit just in those alone. And I'd be remiss to say, I know it's a DSCR thing, but any bank statement loan you've done in the past, reach out to that borrower and ask them if they want to tap into any equity in their property, because we do bank statement seconds. It is a cash out world right now, and that's low hanging fruit.
Yep. Well done. Eric, Chris, anything in closing?
Go back and watch this 2 or 3 times over till you're comfortable with it and have a great career from it.
Yeah. And, you know, I know Oscar says this a lot. These loans don't take long to get up and running with them, right? It's just investors, and it's just really, it's just an easy loan to get started with. So Eric, anything in closing?
We're here to make you money. Lean heavy on us. Lean heavy on your Angel Oak AE. Again, you don't have a credit report yet. You haven't fully baked a 1003. You're wondering about the loan. Reach out to your Angel Oak AE. We love scenarios.
Yep. Yeah, so I know a couple minutes past the top of the hour. I want to thank Eric, Chris. Thank you for your time today, your expertise, your friendship, your years of service to Angel Oak. So I really appreciate you guys. For those of you on this call that have closed loans with Angel Oak, thank you for your business. For those of you who have not, I mean, working with the Chris and an Eric, it's priceless, guys. They have so much experience, and so do all our other account executives across the country. So if there's anything we can help you to close more loans in 2026 and beyond, please reach out to us. Thank you for attending. This recording will be sent out before end of the day.
Chris, you're the best, buddy. Thank you, John.
Thank you, guys. You're the best. Appreciate it.
Thank you, guys.